All right, what is good, YouTube? Welcome back to another video. First things first, if you are not subscribed right now, you better hit the sub or I'm gonna come find you and live in your walls. So you don't want that happen. And second of all, want to apologize because I did not upload yesterday. Got a little busy, but that's not an excuse. So I'm going to deliver some quality content tonight on fibs and standard deviation. So you will find these very useful for measurement, and I'm going to give you the no bullshit, very simple way to understand them. They should not be overcomplicated at all. And I know a lot of people like to overcomplicate them. Very, very simple concepts to understand. So it should be pretty short video. Let's get right into it before I yap any longer. First things first, I want to go into fib retracements. So, all right, so say we want to take a long here. First of all, you do not want to enter off the very top. This is literally the one thing you don't want to do. This is bad. You want to wait for a deep retrace. And I'm saying deep because a lot of people, including me when I started out, will take some sort of bullshit fair value gap at the very top. What happens? They get stopped out and then it goes to their TP. So you probably have had this problem. Fib retracements will help you either way. So let's say we want this buy side. We're pretty overextended, right? We haven't got a deep retrace yet, just little movements up to the top. And now we hit this liquidity. You're still looking to get this high, but you're being patient, right? You're not taking anything yet. And then we get a retrace. Now, where do we want to see price retrace the most? This is where you pull out your fib and look at the 0.5 to 0.62 range. This is the best zone to look for a optimal entry. This is where you call OTE. So in this range, if you have a fair value gap, a breaker block, the CISD to tap, this is the spot you want to see rejection and maybe catch an inverse to the highs or something like that. You know, this is part of the strategy and will be important in the future. So now you might be asking why 0.62? To be honest with you, I don't know, but I have noticed that it does hold price pretty well in this area. So 0.62, if that gets closed below pretty harshly, I honestly would not look to go and take this unless you see a stronger move in the other direction. So now you have a stop that isn't all the way at the lows here, which is where you'd have to have it without a retrace. Now you can have here, bang, you have positive RR. You're banking all day long. You're buying your parents a Porsche. Very simple stuff here. Now let's just go into the short. Again, same idea. I'm not going to go too deep into this. You get a retrace. You want to put your fib out from the very obvious high, the very obvious low. You don't have to overcomplicate it more than that. And then bang, we get a nice retrace, tap the zone, get a nice rejection. What do? You get your confluences going. You grab that short and you buy your dad a watch. That's literally all you need to know with fib retracements. And I'll show you on the chart as well, but that is pretty much it for those. And let's go into standard deviation. So what standard deviation is, obviously standard deviation is a thing in many different fields. To be honest, I don't even know why it's called standard deviation. It's just like a spot that price is likely to go, I guess, based off a manipulation leg. It works sometimes and it is nice to use on all-time highs. If you want to kind of gauge out price in the future off the high time frame, it is nice to use. So let's look at a bearish example here. Bang, we're moving up. We get a close below, you know, change in the state, break a structure, whatever you use. And then we make a manipulation leg up, right? Sweep this high and then instantly reject. Now, this would be your manipulation leg right here, obviously, because this is the one that took the recent high and then we rejected from it. So say you're only seeing this right now. You'd want to measure the manipulation leg from top to bottom here. And then this right here, this little white zone, -2 to -2.5, would be your area of interest, right? This is your first area of interest. The -1, not as important, but you can watch that zone as well. This is what I'm watching to get hit the most and see the most rejection out of. And then -4 is really like you're overextended. Like sometimes it'll just tick this area. Like I swear to God, sometimes it's to the tick. You will hit this -4. It's kind of crazy how it works, but let's just go into what you would see. You'd probably see something like this, or slow movement down and reject off this range. And no, this does not work every time. You can measure a manipulation leg, and it might just completely ignore this or reverse off something completely different. So it's kind of just a measurement tool, something to have in your back pocket. For the bullish example, I use kind of a power of 3 setup here. So we have our accumulation, and then obviously right here, the red line is our manipulation. Bam, measure it from bottom to top, like I have it here. And then we look for this zone to get tapped. That is all you need to know with that. Measure the leg that takes the liquidity and then wicks out of it. Ideally, we want a wick. Now let's go to the chart. First, just go into fib retracements. All right, bang. Here's an example of where you'd use a fib. So we are holding bearish because we just inverse pretty much all of these bullish candles. We have swept some liquidity, and now you are looking to take a short down to these lows. Perfect. And we haven't even tapped these lows yet, so this is a perfect time to use your fib, right? We go and move back up here, hold this gap, right? Never close out of the 0.62 range, so we are holding this trend and then dump from there. So bam. What about this? Bang. Hold it for a little bit, closes below, expect to move down. Very simple. What about this? Bang. End up holding the range on the high time frame, move back up into it, hold it for a while until we close above it with speed, meaning that we are no longer in that trend. So 0.62 level really just means, are we holding a trend? Bearish example, bang. Hold it for a little bit on the high time frame. This would just be a wick. Close up into it, close above 0.62. We are expecting to move in the other direction. All right, if we're moving in the other direction, let's measure here then. Bang. Holding the range, literally tick the 0.62 and then moving up, right? Ignore this. I just have a bunch of standard deviation examples because they are a little bit harder to find. It is not as easy to measure. All right, so now that you know fibs, let's go into basic standard deviation. So standard deviation, obviously you are going to want to look for a manipulation leg. So an example would be something like this. We have resting equal highs and we end up pushing up into it, wicking these highs on a higher time frame, which if you don't know, a wick is pretty much just an inverse on a low time frame. So we end up creating an inverse, aka a wick on the high time frame, and you would be measuring this wick or this leg up from top to bottom. And then we end up holding this range before we close the week and then end up dumping some more. So bang, that is your level you want to be watching. Some other ones here. We have a low here. We end up moving up into equilibrium, right? Moving back down, sweeping the recent low or manipulating it and then creating an inverse, right? Remember I said inverses are wicks on the low time frame. So this is our manipulation leg. And then again, expect us to move up to -2 and -2.5. Now, as you can see, this is over a long period of time. So it's kind of just a nice measurement tool to have in your back pocket. Bam, another example. We end up opening the 830 candle, sweeping these lows and creating a wick. What do? You measure that whole range down and again, move up to this range and tick the -4. Now, as you can see, we did not just react off of this -2 and -2.5 and ended up overextending a little higher before we ended up manipulating again. Let's see. All right, so this one I didn't even mark in advance, but let's see. If we mark this out, this inverse, where do we go? We end up going to -2, -2.5, reacting a little bit. But again, -4 did stay untouched here. But again, this is just a measuring tool. So, all right, this is your ideal manipulation. This is the best example you want to see. This is a very, very nice wick. You can barely see the move down. Instantly reacting off this liquidity. What do? You measure this whole move down. Measured it from the wrong side, but measure this whole move down. And we do end up reaching that point pretty nicely. Let's see if we do this anywhere else. We do a very, very tiny one right here. I just want to see if this works. Bam. Manipulate here. Measure the leg down. What do? On the very, very low time frame, we still react off that point. Oh, here's another one right here. Bam. Whoa. Whoa. All right. Bam. What do? React off this point. Not quite touching it. All right. Very basic measuring tools. Hopefully you guys enjoyed the video. Free Discord will be in the description as well. So join up if you want. We can hop in a call. I will not charge you. But yeah, that should be the whole video. Hopefully you guys enjoyed it. And yep, I'll probably be posting another one tomorrow. Have not decided what I want to make it on. So if you have any ideas, let me know down below. But yeah, peace out.